Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Join us this week for the first webinar, Is a PMS better than an MF? In your investment journey, choosing the right investment product makes all the difference. In this webinar, we'll talk a lot on portfolio management services, mutual funds, the advantages and disadvantages that each one offer. Join us for a comprehensive session on understanding these products and how they can suit your need. This webinar is from 10 AM to 11 AM IST. Are you interested to know how multi-asset funds perform in different markets? The hype has been all about multi-asset funds. Let's take a deep dive into them to see how they can fit your portfolio. This webinar is organized from 11 AM to 12 PM. For the third webinar of the day, we have a 1000 Dreams, One Financial Plan. Financial planning can help you get to your goals in a much efficient and structured way. In this webinar, we'll talk a lot about financial planning and how we can draw a roadmap towards your goals. This webinar is from 11 to 12 AM IST. And lastly, we have a webinar covering beyond ESOPs. If you look at it, a lot of NRIs have their concentration in one company shares, which is their employer. Now let's look at diversifying away from this. This webinar is set at 1:30 PM IST.
We're more than a week into 2025 and we hope that you've been very successful in keeping your New Year's resolutions. When we make resolutions, we usually focus on things that we should do. So we commit to doing something on a daily basis or on a regular basis so that we can achieve better outcomes. But when it comes to our personal finances, it's equally important to focus on things that we should not do. So today's video is going to cover 5 financial habits that we need to avoid to make sure that our wealth creation journeys are smooth and successful. Having bad financial habits can make you feel like you're stuck in a loop and can drag you down in terms of what you can achieve. So the first habit that we're going to talk about is something very simple, which is spending before you save. Now, in the wise words of Warren Buffett, do not save what is left after spending, but spend what is left after saving. This advice is practical and easy to follow, especially with the advent of mutual funds and SIPs, where you can automate your savings right at the time of your salary or income credits and then focus on managing your finances and budget within what is left after that. The second habit that we're going to talk about is again on the spending side, and there's a very interesting Swedish proverb that gives us the essence of what this habit is. He who buys what he does not need steals from himself. We're all guilty of making purchases that we may not fully require, and sometimes that turns out to be quite counterproductive. If we can focus on making our spending a lot more conscious and focused, then whatever we spend our money on will turn out to be useful to us. The third bad financial habit is having a fixed mindset. Many of us think that we should do certain things only at a specific point. So maybe you want to start your investments once the market corrects. Maybe you want to start your investments on a particular day. Maybe you feel like this month has been really tight, or you're looking for the perfect time or moment to get things started. You may also have a fixed mindset in terms of what you believe you can achieve. So for a young person, for example, they don't think of 1 crore as a target that they can create as financial savings within a decade. But this is something that many young people can actually achieve as long as they have a growth oriented mindset and they're able to focus on these targets and milestone their way to that number. The fourth habit that we need to avoid is procrastination, because this is something that can actually spill into all aspects of our life, and it's not just about how you manage your wealth. We tend to postpone things because we want a larger chunk of time, but the truth is you're never going to get a larger chunk of time. In the wise words of Charles Brixton, you will never find time for anything. If you want time, you must make it. So if you've been putting off opening a demat account or finishing some paperwork or figuring out your taxes or making your tax saving investments, there is no better time to do it than now. If it takes 20 or 30 minutes to get something done, just set aside that time and make sure that it happens. The last habit that we're going to cover is checking returns daily. Now, with mobile phones and investment apps available at the tip of your fingers, many of us have this tendency to open our phones and check what's happening on our portfolios on a daily basis. And when I say daily, I don't mean daily. I think it happens multiple times during the day. 2025 is going to be a volatile year, which means there are going to be a lot more ups and downs in your portfolio. And if you're in the habit of constantly checking what's going on, you're actually going to put yourself through a lot of investment anxiety that you could easily avoid. So the idea is that you need to check your portfolio on a regular basis. You can look at what's happening, but fundamentals change only once in a few months. So it makes sense to have a quarterly review in place, which is more structured and disciplined, and not sweat out the details of where what stock or mutual fund is in your portfolio on a given moment. We hope these 5 financial habits are things on your radar to avoid. And if you found this video helpful, please share it with somebody who can benefit from it.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Wishing you a very happy new year. As an investor, you're probably wondering what kind of year 2025 will be and what's in store for you this year. If we think about how 2024 has been as a year for investors, it's been a pretty good one. Pretty much all asset classes have delivered good returns for an investor, and many things have actually changed, most of them towards the end of 2024. So, there are three themes which will actually stand out when we think about what kind of expectations we can set for 2025 and how we should be mentally prepared for the year that's about to happen. The first and possibly the most important theme is that there are going to be no easy wins. What we mean by this is that 2024 was a perfect kind of year where you had valuations, flows, and all of this in favor of the investor. And you had this growth momentum that was also there. But as we move towards the later parts of 2024, we saw that there was a slowdown that was happening on the growth side. Valuations were stretched. Corporate commentary showed that there has been a slowdown, that there was a need to sort of revise some of the assumptions that we've had in terms of how companies are going to perform. So the idea of an easy win or blindly picking a stock within the index and hoping that it will perform or deliver outlier returns, that kind of story is behind us, and we actually have to put in a lot more effort and be more discerning in our choices of investments in 2025. The second theme which stands out is that the macro environment has changed a lot. So we did talk a little bit about the slowdown in growth, but I think if we look at how competitive the global environment is going to be in 2025, that has changed quite a bit. With Trump coming in to power, you have a stronger economic outlook for the United States, and you have FIIs showing more confidence in the US. So this is also coupled with the Fed projecting fewer rate cuts this year and a stronger dollar, and you're seeing more money move into safe haven assets as well. So with this intense sort of global competition for capital, it's not going to be an emerging market story anymore. There are many good alternatives for investors, and this will again be a theme that plays out, inducing a higher level of volatility in emerging markets like India, and also showing that we have to balance growth, valuations, and opportunities quite effectively as investors. The third theme that stands out is in terms of a new set of winners. If we look at Mint's publication of the quilt, which is something that they do on a yearly basis where they show data of different asset classes and how they've performed over the last decade, what actually stands out is that the top 4 performing asset classes all belong to equity. So you've had mid cap, small cap, the S&P 500, and large caps rank in the top 4, and you don't have any of the precious metals or fixed income categories or even real estate ranking in that league. So I think the next decade actually will look at a different set of winners, or at least the in-between years can show us that some other asset classes are poised to outperform. So we do know that from a fundamental perspective, valuations are a little stretched in the market. We do see better merit in asset classes like fixed income, where they have the potential to benefit from rate cut actions that will occur through 2025. And of course, from a fundamental perspective, even precious metals look like a good pick. So when we keep all of this in mind, I think what will really shine is that 2025 is going to be a very different year from 2024, and the kind of expectations that we can set or the assumptions that we've had in 2024 are actually going through a sea change, and we need to think about 2025 with a very fresh perspective. If you learned something in this video, please do share it with a friend. And if you know someone who's thinking about how 2025 is going to be, they might also benefit from this video.